Hey, good morning. It's Tuesday, April 8th, around 8:12 a.m. Central Time, and we haven't done this for a while, so I thought I would record a video pre-planning some trade ideas and trade setups for the morning session here. So we know that we are still in an overall bearish environment. The market was quite oversold and overextended yesterday, Monday, April 7th, and it made sense to be a bit more open to buying opportunities. But now that the market has already worked off some of that oversold and exhausted condition, I think it's going to be a bit more difficult for the market to continue heading higher. So today's short-term bias is neutral bearish, and our intermediate term bias continues to be bearish. So clearly we are still in an overall bearish environment, and for that reason we should still be more open and focused on finding good shorting opportunities and be more cautious and conservative on the long side. So in the event that the market pushes higher into 52.8475 to 53.0375, which marks yesterday's RTH high, that is a spot where there is potential for sellers to be active. And then beyond that, we have the bias confirming zone at 53.12.5 to 27.5. So that's the zone that buyers will need to take out in order to trigger an intraday bullish confirmation. So first test of the bias confirming zone should provide us with a good opportunity to take a short play. And then on the downside, in the event that 53.12.5 to 27.5 ends up being a failure point, there is going to be potential for the market to reverse back down into, at the very minimum, the overnight balance. And from the overnight session, the most aggressive area of support is at 51.8075 to 91.75. So we're going to go ahead and set the high probability target to 86.25, which at the time is the midpoint. We might adjust that a bit. And then the final target could quite easily be the overnight low or even the previous close at 5,097.25. So in this high volatility, we can shoot for much bigger moves. And even these targets, 51.86.25 and 51.15, are not really all that aggressive, because if the market does indeed fail at 53.12.5 to 27.5, then we could even reverse back down into not just the overnight low, but even the initial support zone, which is down at 5,052.75 to 74.75. So the targets that I'm using here are still relatively conservative. And then at the initial resistance, we can also consider taking a short. And again, we are going to look for that move down into the aggressive support at 80.75 to 91.75. And again, we'll look for a move down into the overnight low. And based on that, you can see that even if we short it ahead of the zone, it would provide us with 4R. Now, one more thing that I'm going to do is make a copy of initial resistance, and I am going to place my stop at 0675, and this way I am effectively daisy chaining these two zones, where if I short at 83.75, which is still ahead of the zone, and my stop is at 0675, if the stop gets triggered, I will already be in short again from the bias confirming zone at 06.5, and that trade still has 5R potential. So on the upside, this is going to be the first short play, and then in the event that the market breaks above 53.27.5, the next bias confirming zone is up at 54.07 to 15. Now, of course, sellers may step in at one of the earlier zones, and if ES is getting exhausted into one of these zones, I will certainly consider shorting there as well. But the bias confirming zones in this environment should provide us with an automatic short opportunity. And if sellers step in at 54.07 to 54.15, then we could actually reverse back down into the prior bias confirming zone at 53.12.5 to 27.5. So I want my final target in this case to be 53.27.5, and my high probability in this case can be the bias changing zone that is directly in front of that. So I'm going to set this to 53.56, and we will use the same targets for this zone as well. So based on that, you can see that we can take a short at 54.01, stop 16, and then take it again at 19. And again, I will create a copy of this zone and just put my stop behind 19. And that way we are effectively daisy chaining these two zones as well. And my entry is not that far off. It's only 1.5 point higher. And there's 3R potential at this zone and 3.8R potential at the next one. So even though I may consider taking a short at one of these zones as well, these are going to be the highest probability short setups on the day time frame. Now, on the downside, I am open to taking longs as well, but only at good trade location. And because we're in an overall bearish environment, we should be much more conservative with our targets on the long side. Now, the challenge with buying any of the support zones today is that if the market fails at the initial resistance zone or at 53.12.5 to 27.5, then the high of day may be in. So that makes it riskier to buy the aggressive support at 51.80.75 to 91.75, and even at the first bias changing zone at 51.15 to 26, we may just get an intraday reaction rather than a larger reversal. So given that we're in a bearish environment, I think it makes sense to be more conservative with our targets. And for that reason, I am going to leave the targets as is for the pre-market support setup. And I am also going to make the entry at the front of the zone. And we'll actually change our high probability to the 41.5 to 63.5 area. So we'll go ahead and just set 62, and we'll set the final target to 80.75. And based on that, if I'm getting in at 25.5, there is at least that 3R potential. And then below that, we have the initial support zone at 52.75 to 74.75. I think that's a much better area to consider buying. But even in that case, I am only going to shoot for a move back to 51.15, which is the overnight low. And I'm going to set the high probability to just 5100, which is ahead of the 5105 high volume node. So based on that, an entry at 63 gives me 3.25 R. Now, if initial support breaks down, then the market could head into 49.75 to 89, and that could also present a good buying opportunity. And in that case, I'm going to shoot for a move back up into initial support with potential to test higher into, again, the 5100 area. It's a bit on the optimistic side, but I don't think it's out of the realm of possibility because we are in a high volatility environment, and today could be more of a balancing type of session. I doubt we're going to get a major reversal today. So initial support could present a good buying opportunity at 5,052.75 to 74.75, and then the next bias changing zone is at 49.75 to 89, and then in the event that we head lower into 48.67.87, that marks yesterday's low, and by that point in time, the market would also begin exhausting the range potential, so we can certainly consider buying that zone as well. And in this case, we're going to look for a move back up into 49.75, which is our prior significant broken support. And our high probability and final target in this case can be exactly the same. And if we go down to 48.32 to 52, which again, the market would be exhausting the range potential by the time it gets there, and it's a bias confirming zone, we are going to use the same target, 49.75, for the high probability, and we'll set that to the final as well. So on the downside, these are the long setups that we can consider. Now, if the market is truly strong and we're going to get a very bullish day, then of course the market may hold above 51.80.75 to 91.75. That is the aggressive area of support. Holding above that area is a sign of stability and intraday strength. So if we are going to break out above 53.12.5 to 27.5, then we could hold above 51.80.75 to 91.75. But because we are in a overall bearish environment, I personally just don't want to buy the aggressive areas of support, and I have to let that upside move go. So in the event that the market breaks above 53.12.5 to 27.5, the trade location is going to be too aggressive for me to jump in on the long side, and I'll just have to let that move go. So part of being selective is this ability and willingness to let certain moves go that don't fall within the day's context or trade plan. So if today we end up getting some crazy rally out of nowhere, then I'm perfectly fine and comfortable letting that go, and I'm going to keep my focus on the trade ideas that I have pre-planned for. Now, because we're running on very high volume and high volatility, a real-time intraday pattern could get established later in the morning that perhaps presents a different shorting opportunity or even a buying opportunity, but that's not something we can plan for ahead of the open. So right now, it's 8:25 a.m. Central Time. We're 5 minutes away from the RTH Open, and this framework of setting up and pre-planning the ideas in Vulcan Trader is just going to make it easier for me to execute after the open. So if the market pushes up into the initial resistance or 53.12.5 to 27.5, all I have to do is make sure that we're not seeing unusually high upside momentum, and I can consider taking the trade. And of course, if I happen to get a better price, then I might get a better entry and better reward to risk. But even at 52.8375 and 53.06.5, the market is providing decent enough reward to risk, and the targets are quite conservative. So we'll wrap up with that. If you found this video to be helpful, please do share it with other traders and let me know. Leave some feedback on my X account, and good trading today, and I'll catch you in the next one.